been able to see what happened over the last 10 years and the value that is created in the private markets, where management teams have time to really do major transformations. The strongest performers in the region, both locals and internationals, are the ones that are committed for the long run.
Hello and welcome to Brazil is Not for Beginners. Today my guest is Gustavo Camargo. Gustavo is a partner at Bain Brazil and is the head of their investor practice. Gustavo was my boss when I first came to Brazil in 2013. We did a fun project together. Gustavo, thanks so much for coming on and talking to me. I really appreciate it.
Thank you, Isaac. It's a pleasure being here. It's nice to see interest from people to better understand what is doing business in Brazil. And it's nice to have people like you creating this type of channel. So I thank you.
Awesome. Full disclosure, in addition to being my former boss, Gustavo is an investor in my company and an advisor. We're really lucky to have him on board. And again, really appreciate him being here with us. Gustavo, as I mentioned, you're a partner with Bain here in Brazil. Could you tell us a little bit about your background, your trajectory, what got you interested in consulting and specifically the investor practice?
Sure. So I joined Bain in 2005. Before that, I studied business economics. And while doing my undergrads, I transferred for a while to US in Austin, the UT. And I think there I started to have contact with some broader curriculum on development. My key area of concern, the area I was starting to do research, was development and how not only countries, but regions, cities, neighborhood, how some areas develop more than others. And specifically the role of private companies. What I learned in that process and what was important coming from an underdeveloped country is that local entrepreneurship was one of the roots of development in the local level. So when you have people in a poor area, when people get organized to create small shops, small companies to provide goods and services, not only you generate income for that group, but you generate economic momentum for the location. So that's something I started working there. After that, when I returned to Brazil in 2003 or 2004, before joining Bain, I started working in one company, a medium-sized company that was funded by Endeavor. They were accelerating a lot, changing the business model. And I was hired to support developing the finance area of the company as it was going very fast. So it was a concrete example of how accelerating the growth of a mid-sized company, not only you create a lot of jobs inside that company, but you create economic momentum in the whole supply chain. Working in that company, I got in contact with some partners of consultings. And I joined Bain, so in the second half of 2005 as a part-time to try to learn a bit about it. I thought 2, maybe 3 years of work in a big multinational would bring me interesting, valuable toolkit. I still believe another 2 or 3 years of work in a big multinational will enhance my toolkit. And the reality is that the opportunities, the impact, the joy with the colleagues and etc. kept me excited over this 16, 17 years. But it was, I think, on top of being a consultant, it was a lot of business building, because in this past 17 years, Bain moved from 60 people to 750 consulting team, from one office in São Paulo to São Paulo, Rio, Santiago, Buenos Aires, Bogotá, Lima, if I didn't miss anything. And sometime in my early years at Bain, I transferred to Boston. And while there, I started working with financial investments. I focused 100% on financial investors. That was 2009. So in the back end of the GFC, the Great Financial Crisis. And at that moment, with a big recession and drop in valuations, maybe similar to what we are seeing today in the global markets, there was a lot of very interesting investment theses around looking for super strong companies that had IPO'd, that had very high potential businesses, but were dumped by investors, dumped by the public market. So at that year, 2009 and the first half of 2010, we worked with a lot of tech-focused PE and growth investors in identifying some of these businesses, doing a rigorous diligence, on those business, buying them out in the public market, closing the capital, restructuring in a way to accelerate the growth. And most of those targets were IPO'd again, were like sold again 5 or 7 years after that with huge growth. So it was a lot about doing the analysis to check that thesis, but being able to see what happened over the last 10 years and the value that is created in the private markets where management teams have time to really do major transformations. It's very hard to do major transformation in a public company when you need to go to the market every 3 months and explain what's happening to people that doesn't spend more than 5 minutes a quarter to hear you. So being able to see some of that big transformations happening with investors in the private markets was an amazing school. And then I returned to Brazil maybe 2011-ish. And that's when we started doing as consultants to work with financial investors here. If we're looking back in time, this was the later part of the boom in the Lula years. The big growth in Brazil. Brazil had the boom of the C class, the B class, a huge increase in public spending and some public programs that lifted a lot of people out of poverty and boosted the middle class. And as a consequence of that boosted middle class, like retail, financial services, education, health, lots of segments had opportunities. And back in 2011, 12-ish, a lot of the big, well-known financial investors were starting or accelerating their businesses in Brazil. So most of the well-known PE brands either had a local operation or started a local operation or had partnerships with one of the key local players. And I returned to Brazil and was part of the team who work with financial investors with this emerging market perspective, which is very different than doing the same type of diligence, assessment, transformation program, value creation planning. All of the elements are relatively similar, but with a very different flavor, if I may, and a big component of tropicalization. Almost all of the theses are around growth and accelerating growth, about finding big pockets of demographic versus well-defined segments, about identifying sectors that doesn't need a lot of cash in the operations because every 3 to 5 years there is a crazy roller coaster on interest rates in Brazil. So if you are too exposed to that, it hurts disproportionately your investment thesis. So we developed that expertise, and I have been running this business inside Bain for the past 10, 15 years.
That's really interesting, and I appreciate all the background that you shared. There was a lot that you said that resonated with me. I don't know if I ever shared that I also started my studies in international development economics and started my career at the World Bank. So have a similar interest in impact and the role of private companies, which I think you know based on your investment in Teddy. But I didn't realize that that was also your area of study. So another thing we have in common. But there was a lot that you touched on there in terms of the roller coaster of Brazil, in terms of tropicalizing some of the private equity or investor playbook that I think it's worth going into. And so if I understand, broadly speaking, your practice revolves around two types of projects, and feel free to correct me here, because I'm sure I'm simplifying tremendously. But generally, you're either working with an investor on understanding an investment opportunity, so doing due diligence or some sort of market mapping or some sort of pre-investment analysis. And then afterwards, you're doing post-investment strategy, where you're working on those growth strategies. And in both cases, I know that you're working with a mix of local investors and foreign companies. The project we did together was with a sovereign wealth fund that was coming to Brazil at the time. But I'm wondering if you could talk a little bit about specifically the perspective of the foreign firms and some of the common misconceptions that they have about Brazil. What are some of the things that you have to explain to them, similar to what you talked about with that interest rate roller coaster?
You're totally correct. I think I will not say 50-50, but there is a lot of projects that are answering the question of should I make this investment? Depends a lot on the stage of the company and the market. When you are assessing an investment that is very early stage, the questions around fundamentals of the demand, of the need, of the market to be served are more important than the target itself. So the work pre-acquisition, pre-investment will be more around identifying the market, confirming the need, confirming that this is something that can be addressed, solved, that it's a growing problem. If it's a more established market or company, then it's around double clicking the target itself and confirming that that target is positioned to maintain and expand their position in a market that already exists. But earlier stage investments, they are early in the life cycle of that company, but also early in the life cycle of that market. So very often the market doesn't exist. The question is, what's the magnitude of the problem? How much lift and value is created by solving it? And then post-acquisition is different. It's depending on the investment thesis. The investment thesis itself includes a lot of transformation. So sometimes the investor needs support to support the management in executing that transformation. So that's a lot of what we do. And very often, after some 3-5 years of investment, that investment thesis, that initial plan is already executed. But then your question is, okay, what now? Should I exit? And it's kind of funny because it happens in the two situations. Either it's doing really well and you say, oh my God, I don't want to divest. So I need another plan because I want to continue to be the sponsor of this team and company. So I want to think about a new strategy to continue here. Or I will IPO or I will sell to someone else. Or the company is not doing what you expected. And you have the question around, okay, so do I pivot? Do I double down? If I had the plan and the plan is not coming the way I thought, do I replan? How do I replan? Or my plan worked so well that now I want to know if I have another plan or if I have an exit. It's kind of funny because the two things happen on equal frequencies. And that let me now take the pre-acquisition and post-acquisition elements and differentiate local investors versus international investors. So first is, I think I will be the 10th people to say Brazil is not for amateurs, but I don't think any country and any investor is for amateurs. So I don't think that specific part is specific to Brazil, but I think Brazil is specific in its own way. And what I learned working with investors from different segments, it's not that internationals are too different than locals. It's how do you think about your role and your involvement in that market? There are very successful international investors in the country that have been investors not for one vintage, but over the long run. And if you're investing over the long run, a lot of the risks I will call out will even out across your tenures. So, for example, one of the big nightmares for anyone that do benchmarks in US dollars is that the returns fluctuates a lot with the currency. And if you look into small periods of time, the currency fluctuation, the exchange rate, explains more of the performance of the investment than the EBITDA generation of the company itself. But that's because you're looking into the wrong time scale. You're taking a too short time scale. If you look across vintages, that movements up and down of the FX evens out, and you are left with much more signal than noise. And so the strongest performers in the region, both locals and internationals, because we also saw some locals entering and exiting, the strong performers ones are the ones that are committed for the long run. So they will not deploy capital and exit at the same pace every year, but they are always looking for deployment and exits. So the crazy changes in exchange rate might impact positively and negatively one or two investments in one or two vintages, but across you are left with like real performance of the actual alpha of the companies you acquired versus the noisy that comes with macroeconomics. So not internationals versus locals, but the longer time commitment. Because for those that takes one or two few selected investments, you need to be, so your hypothesis is that you know in what point of the cycle you are investing, so you will benefit from the cycle. And the cycle is amazing looking back. You can prove and explain everything when you look into the rear mirror, but people are 50% right and 50% wrong when they talk about the present and the future, trying to guess in what part of the cycle you are in. So that's the thing. So taking a commitment in the long run is probably the single variable that separates successful versus unsuccessful international investors in the region. There are a lot of very smart people and great ideas in the cemetery of investors in Brazil. Lots of companies that entered in 2008, 9, during the boom years, and exited in 2014, 15, and just lost money. And 80% of the loss is explained by interest rate and an exchange rate. But that was, they were just exposed to the wrong part of the cycle. They didn't know that up front. No one knows up front. That's the wrong way to be opportunistic. The more successful way to be opportunistic is to understand that you are being opportunistic, but you are exposed in the cycle. So you accumulate learning, you accumulate relationship, and you hedge some of these variables that are impossible to guess how they will perform on a forward-looking way. The second thing is several international investors, the way they look into, it's not specific to Brazil, that's typically how some investors do emerging markets. It differs that investors that have a local pocket versus investors that have a global pocket. What do I mean? Imagine two GPs, two investors. They're both international, so they're not headquartered in Brazil, they're not doing fundraising here, they're not reporting results here. But one have a fund that's earmarked to Brazil or Latam. The other one have a fund that is like global fund for everything. The fund that is earmarked for the region will need to do the investments in the region. So in the moments in the cycle where it's harder to justify or to find high projected returns in the cycle, they will not make investments and they will maintain their dry powder. Whereas the GPs that have a global fund, they will make the investment somewhere else. So the big difference here is what's the size of the Latam or the Brazil stake in the fund? Is it fixed and the pace of deployment changes? Or is it not fixed? So depending on the year, you might put more money in China, more money in India, more money in Brazil, but the relative share of Brazil in the fund will change. There are great examples and poor examples in both models, but my sense is that when you have funds that are earmarked to the region, the GPs ends up being a little bit more disciplined in maintaining relationship over time with entrepreneurs, and maybe they will pass a round or they will pass a window, but they maintain the relationship because they know they have resources that are earmarked to that region, so they might do that in another moment. And I think over the vintages and over the time, this yields a better return to the fund globally. I understand the flip side of that is that the fund will accelerate and decelerate the pace of investing, and that probably creates other problems for them or other challenges for them, but that's a big difference. And that's on the investing side. And comparing to those that are in Brazil, frankly, even if the GP is local, the LP is never local. So the LP is a global market. So that explains more of the difference in behavior than the fact of being local or international. And I think the local investors, they have the advantage, or maybe the characteristics that the LP already decided to be exposed to Brazil risk because he's investing in a Brazil fund, right? Or in the Latam and Brazil fund of a local or an international investor. So there is not this question around, oh, am I comfortable being exposed to this political environment? This question is not relevant.
That makes a lot of sense. I think that the points there, and you've kind of touched on it a few different ways, of the long-term commitment to Brazil. Brazil is very relationship-based, building those relationships with people, even if you're not investing all the time, but continuing to be present is a big thing. I think we saw this in the most recent cycle where, again, we had a lot of tourists, but you're starting to see more people focus on Brazil. That's a really great point, and I just wanted to double down on it.
No, that's perfect. And on the exit side, it's the same thing, right? If you are committed for the long run, you are not looking for the perfect moment for the interest rate or for the exchange rate or for the global markets, whatever. You are looking for the right exit moment, considering the life cycle of that company you invested in. So at what time does that company benefit from a corporate sponsor and you are going to sell to a strategic? In what moment that company benefits from going to the public market and IPOing? And then you make that decision based on that, on what's the ideal exit for the company. And I think maybe not on a per investment basis, but across the vintages, you will make better exits because you're making the right decision for the right reason and not depending on luck and your timing. So, for example, a company that's already mature and should be exited, but you don't want to sell because of the current situation in the exchange rate, you are hurting the growth of that company because of your position as an investor. That's the type of mistake I'm saying that an international investor that is being too opportunistic might end up doing.
That makes a lot of sense. You talked about there of that long-term vision, also being specific to the company and understanding where you are. And having that long-term perspective allows you to let things even out over time. Going a little bit deeper here, when I first approached you with this podcast idea and told you what it was and what we were going to talk about, you actually laughed. You said, I completely get it. I've dealt with this before. Is there anything that you can tell us in terms of a story, good stories and bad stories, where you've seen people come into Brazil and be able to succeed, maybe despite themselves, succeed because they understood something, or run into problems because they didn't understand the local bureaucracy or how companies work? So I'm wondering if there's anything behind that laugh that you can share with us.
Brazil more often is on the international news for bad things than from good things, excluding sports, right? It's more common to see Brazil in the international media because a crazy president is trying a coup d'etat than because, oh my God, this is a great fiscal policy that helped us reduce inflation faster than the rest of the world. Even though I just described two things that are real. There was a crazy president trying to do a coup, and it was probably one of the fastest or earliest country to deal with inflation created by the fiscal stimulus in the COVID crisis. So very often we have these conversations and they are spiked by whatever is crispier on the news. To quote a classic of literature, all happy families are similar, but the sad families are sad in their specific ways. Successful stories, they have a bedrock of mid to long-term commitment. And I can think about success stories from investors that they are just wanting to make money, but also with big conglomerates that decided to enter it. If you just take a step back and try to see what is Brazil before you ask the question of, do I want to enter there? It's a relatively big economy, something around 200 million inhabitants, 50 million families. It's not a poor country on average. It's not a rich country on average as well, but it's very unequal. And this inequality creates much more situations and or opportunities than most people think. But just to put that in perspective, what does it mean? And when you add the social class distribution, etc., Brazil, A and B class, only the A and B class, is roughly the size of Canada. So imagine the whole country of Canada. The A and B classes, on average, the income per capita is equivalent to the average income per capita of Canada, and the number of families and individuals is the size of Canada. So inside Brazil, there is one full Canada plus class C, D, and E. So depending on what you are doing, you look into Brazil and you should think about Canada. So if you're selling very expensive, fancy yogurt, look into Brazil, we're selling yogurt to Canada. If you're thinking about, oh my God, I'm doing something in out-of-the-pocket healthcare, out-of-the-pocket education, consumer goods to wealthy individuals or to relatively wealthy individuals. That's a market as big as Canada, which is not small, but again, it's not India, right? But depending on what you're doing, you are serving 50 million families. If you are creating services and products for middle class, you had 100 million people somewhere that we can call middle class for most financial services products, for most, depending on what you're doing, retail products. e-commerce, technology, everything that is behind the wheels, so serving other companies, you're serving a market of 200 million people. Given this magnitude, any relevant, any big company in consumer goods, it can be in food, it can be in technology, it can be in appliances, etc., that considers themselves as a global company, either they have a Brazil business or they have a Brazil entry strategy somewhere in their strategic priorities. The success stories are the ones that understand what they're doing and acknowledge that, okay, I want to be exposed to Brazil. And the success stories are the ones that identify those needs and those opportunities and monitor and execute it over time, committed to creating a business in the long term, both as an investor as well as a corporation that's exposed to the region. And the flip side is the opposite, to say, hey, are the companies that when the country is growing very fast, say, oh my God, it's too hot in the news, I need to be exposed there. And then I will acquire someone or create organic. But if you make the right decision to be exposed to the market, but with the wrong rationale, looking into for results in the short run, the first crisis, the first moment of drop, you will probably revisit your decision and exit. And I think that's the failure stories, I say. Each one of them is very specific. Sad families are sad in their own way. But with this bedrock of we're looking for opportunistic ways of capturing this fast-growing market, this fast-growing country, this fast-growing segment of the population.
Yeah, I think we see it specifically in the recent cycle that we just went through, especially in VC.
Exactly, yeah. Technology is a great example, right? There was nothing on technology for 20 years. And then in 5 years, when you double click and try to separate success stories of companies created in this last 5 years, there is a lot of very interesting stuff out there. They are solving real problems of big demographics of individuals or companies and with a long run perspective. The sad stories are copycat of something from somewhere. Let me be the whatever of Brazil. You don't see a lot of those. Maybe one or a few were sold in the right moment, maybe by lucky, maybe by competence, I don't care. But it's not strong stories of businesses, right? If there are strong stories of some good stories of investments, but not strong stories of businesses. The strong stories of businesses are rooted in real needs and a commitment for the medium term at least.
Yeah, that's something we've talked about, and I want to get to that in 1 second. We've talked a lot about the investor side, but I think for local companies, sometimes it can be sexy to say, I have an international investor. I have the investor from Europe or from the US or Japan. What do you advise local companies when they're considering investment from abroad as opposed to from somebody's here? What are some of the mistakes they make, or what are things that they should keep in mind when thinking about having an international partner and these international investors coming in and being partners with them?
First of all, everyone in the ecosystem should think about investment as a relationship that goes beyond the funding. I'm not even saying beyond the money, beyond the funding, because there is a lot of passive investment, and that's great, and there's nothing wrong with that. I just think that for the investor, they should look, or we should look, sometimes I'm in that position, we should look for not companies, but thesis where we believe the thesis is correct for the right reasons, and what the investor can add to the table is money in the short term, money when the company needs. That's why I'm saying funding more than just one round. And also, what else can you bring to the table other than your money? And let me break that in parts. So first is, the thesis must be correct. You must believe in the thesis. What I mean by that is, if you are committed, you should not be committed to buying something today to sell in whatever, 1, 3, 5 years, doesn't matter. Because the price will be higher. But because whatever that company is doing is creating much more value than it will capture. And that's why I say that you need to believe in the thesis. If a company is serving a specific market, your thesis needs to explain why is that important and why solving that or addressing that creates much more value than you are capturing. Then my second part is the thesis needs to be right for the right reasons. Is that it's not about creating value because someone is paying, But what is the rationale for that? How sustainable is that in different regulatory environments? Are you betting on a current scenario that is stupid? Are you just saying, no, I am underwriting this because the current regulation creates this problem, so I'm solving this problem? That's a right thesis, but this is for the right reason, because you are counting on something wrong continuing. You are counting on the incompetence of your competitor. You are counting on the market not developing. You are counting on the barriers from international companies to continue. So every time your thesis depends on stuff that are not correct, I think it's just not only too risky, but it's a stupid risk, because assuming you don't know when, other people will be solving that problem. And your thesis not only needs to be correct, but if it's correct for the wrong reasons, you depend on the incompetence of others solving that problem. I think regulation is a very important one. And I remember, again, without disclosing too much details, but I remember working with healthcare in Brazil 15 years ago. There was a big constraint on international investors in healthcare, right? So building a business that depended on that constraint would make sense and would probably have been profitable for some years. But after some years, that constraint was lifted. And either you were right for the right way, for the right reasons, you would create scale, you would create value, you would reduce costs, you would be more efficient, you would be more competent, better quality, better brand, whatever. Or if you just depended on that artificial barrier, it could be the right thesis, but for the wrong reason, too risky, too stupid. The last element is like you should, as an investor, think of what else can you bring to the table. So even if you're passive, you should consider the investment as, I'm not investing in that round, I'm investing in that thesis. So that thesis might require funding across gates and cycles. It may be staged investing, like in stages, but even the deployment of money should be thought about on the need for that company, for that business, and not for that round specifically. And I think investors should try to always challenge themselves why their money is better than anyone else's. You don't want to be a commodity. So do you have additional expertise? Have you done that in other regions that allows you to make good questions? Can you be an accretive member? You don't need to be a board member, but can you be an accretive challenger to the management? Can you be an accretive member of the community of the company? So you make introductions. So what else can you bring to the table so you are not just another dollar that is equal to everyone else's dollar? What can you differentiate? And I think the companies, obviously, they need financial resources as funding, but they also benefit a lot from governance. They benefit a lot from access to talent. They benefit a lot from access to networking, relationship, and all of that investors should be able to provide, even though they are minority, whatever. That's my belief. And as a company receiving the money, it's even more important. This next $1 million of funding you are bringing, is it accretive not only to your cash position, but to your relationship Holodex? Is it accretive to your governance? Do they bring experience having done something similar to one of your challenges, so you have an extra phone to call, an extra person to call and ask, oh my God, I'm struggling with this. What do you think? Or is it just another person for you to spend 1 hour per quarter trying to explain what happened? Because that extra hour is also very valuable. You shouldn't waste 1 hour explaining something to an investor that is not adding anything, and you will need to explain probably even more if things are not going as expected.
That's really great insight. And we've had these conversations privately as well about accretive value. And obviously, we love having you as an advisor and as an investor with Teddy. And I think that's really great advice to companies thinking about having somebody that is committed to the region, committed to the thesis, somebody that's thinking about not just their dollar impact, but the multiplier effect of them as a partner. Coming in, knowing somebody can potentially invest again or help you as you think about those future investments, that access to talent, especially if you're in a growth stage, bringing on professionalization. I think that's all really, really interesting and tied into what I was going to ask you about your investment thesis as an angel as well. And so really helpful there. I want to change gears here just at the end. And I want to ask you, you mentioned earlier on the expression Brazil is not for beginners. As a foreigner, anytime I sit in a meeting with accountants or lawyers, somebody always says that to me. So what does that mean to you when you hear it, or potentially when you say it to people coming in?
So I think wherever you're coming from, you have embedded in your soul the way of work of that location. So anything that is different will sound either wrong or incomplete, or you just will not understand. My best suggestion for myself when I feel myself in this situation is say, okay, what am I not understanding so that the reality makes sense? I am not making sense of the reality because I miss something. I'm missing context, I'm missing history. So when I say Brazil is not for beginners, that's when you are a beginner, things will not make sense because you don't have that context, you don't have that history, you don't understand, you don't read between the lines. How do you learn to do all those things? Spending more time. So the more we talk, we will return to the question, to that point around commitment for the long run. Some elements are easier to call out. For example, it's not unique to Brazil, it's very Latin. For example, the way people talk about more often people you interact with in Brazil and in other Latin cultures will avoid disagreeing with you, especially if you are in person. So let's say you are talking about a deadline and they say, okay, can you do that by Monday? More likely, if someone doesn't believe they will be able to meet the deadline in São Paulo, for example, or in Rio, they would say, oh, we'll give it a try. They will not say no. They would avoid the no because the no sounds rude and aggressive. They will say, oh, we'll give it a try. Someone from an Anglo-Saxon culture might hear that as it's possible or it's likely. He didn't say no, so he will do it. And so the problem is as much about the individual not saying no as the person listening and guessing that not saying no is a yes, right? What's missing there is not the communication, is the context to understand that you should make a follow-up question. It's okay, you will try, but if you don't get it by Monday, what do you think is the feasible deadline for that? Or when can I talk to you and confirm the date? Because if you already know the person on the other side, especially when there is hierarchy, especially when there is people are not very familiar with one another, this avoidance of being of saying no because it might sound rude, that is very keen to the Latin culture, will create that miscommunication. Just want to make that a broader component that Brazil is not for beginners because beginners don't get the context on Brazil, on India, on China, on Japan, or on the Nordics. So how do you get there? You spend more time, you commit, you visit multiple times, you ask and re-ask, you phrase and rephrase so that you develop your skill of reading between the lines is more efficient than trying to have a cheat sheet of what exactly every expression means. And that requires more time, that requires commitment to the long run. And the difficult thing is that commitment with the long run takes time to develop. So,
no, this is great, and there's definitely, you've been doing this for 20 years, working with investors coming into Brazil and with local companies, and obviously you've seen different cycles and seen how people have won and have lost, and who's been doing this well. And so that idea of commitment is really strong. And part of the idea of this podcast is for those beginners or those experts, frankly, I think you can always learn. And it's about keeping that mindset, like you said, of always asking and rephrasing. And so just as a final question, and I think you touched on some of this, are there any expressions or habits in Brazil that you think are really unique, or things that people should be aware of when they come? I can give the example. This weekend, we had an event at my son's school. My son is 2 years old. My wife is 39 weeks pregnant. And we find that, one of the things that stands out to foreigners is how much Brazilians love babies. And babies, and frankly, pregnant women's stomachs don't belong to them as much as they belong to the community. And so we're at school and all of the professors are touching my wife's belly and talking about when is it coming, and what is it going to be? And that's something you'd never see in the US.
Yeah, this example with the pregnant women is an extreme, but I think everything around like physical contact is probably something foreigners should expect. Like you just met with someone you've never seen, and then when you're saying bye, they will hug you. That's normal. Or next time you see, they will kiss you on the cheek to say hi. You might see something similar to that in Italy, France, Spain, in the Mediterranean as well, but definitely not my experience in the northeast of US, for example. And that's like touching and this sense of belonging very fast is also happens in other settings, not only the touching, but for example, you just met people for dinner and you are about to leave, and they will say, "Oh, let's have another drink, and let's have another drink, and as if they were your friends for 20 years. The flip side of that is that they will not get bad if you don't follow through, if you don't agree.
Well, Gustavo, thank you so much for joining me. This was a lot of fun. I learned a lot. I always learn a lot talking to you. So this was really great. If people want to reach out to you, they can find you on LinkedIn, right? Is that maybe the best way for people that are interested in connecting?
Yeah. In the Google age, just Gustavo Camargo, people will find on the obvious channels. That's it.
Wonderful. Well, thanks so much for joining me. It was great having you on.
Thank you. Bye-bye. And good luck in the final days before your kid.
Thank you. Yeah, we're on baby watch. So by the time this gets published, I'll have a second one. So thanks so much. Thanks again for joining us. This podcast was hosted by me, Isaac Matzner. It was produced by Amanda Villela and edited by Veronica Medina. You can find more episodes on Spotify and Apple Podcasts, as well as on our Substack page. We love feedback, so please feel free to reach out to us on social media or via email at Brazil4beginners@gmail.com.